So I think that, in quieter moments, maybe even, behind closed doors, that even the Fed, there's probably been some whispers about, well, what if? And that what if being, if we go to the new system, how important would gold be? Could it be? What would it do? Could it solve the problem? Would it be better recognized and adopted?
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. And finally, 1/10-ounce gold Britannia are just $29.99 over melt per coin. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend David Morgan from the Morgan Report. David, thank you so much for joining us today.
Thank you, Elijah. It's good to be back.
Well, it's great to have you today. We've talked quite a bit about digital currencies, and especially central bank digital currencies. It's kind of an interesting concept because Bitcoin came out as a currency that was decentralized, right? And semi-anonymous, something that was limited in supply, but central bank digital currencies are pretty much the exact opposite of it, right? It's the evil twin of Bitcoin, where it's probably not going to be limited in supply. It's centralized and it's really not anonymous at all. And it sounds like actually India is rolling out a test with the Rupee. Can you share with us a bit about that?
Yeah, I've actually been interviewed by a financial writer in India recently a couple of times, and I'm on his LinkedIn, and they sent it to me. It's from the Telegraph in India, the India Telegraph. And the Bank of India, the central bank, is issuing a CBDC on a pilot program in 4 cities, and they're pushing that direction. So it's definitely what you just said. It's a central bank digital currency issued by the central bank of India, and they have it. It'll be in Mumbai, New Delhi, Bangalore, and Banswar, which I'm sure I butchered that last city's name. But so they're serious about it. Retail digital rupee will be a form of digital token that represents legal tender. The RBI will issue digital currency in the same denomination as paper currency and coins, and the token will be distributed by the banks.
How big of a development is this in central bank digital currency, and how do you think it could change how countries are moving forward in this respect?
Well, it just adds to it. I mean, if you look at the number one, that's China, and they've had their CBDC for some time. It's basically the way that, in my opinion, the globalists or the banking elite want to take the world. And India's got over 1 billion population. China's 1.4 billion purportedly. So you're looking at about pushing toward 3 billion people on the planet that would be using the CBDC. That's a significant percentage. And usually, in my opinion, they go for the people that are already, let's say, the most compliant. If you remember not too long ago, back in India, under Modi, they changed the amount of physical dollar or physical paper rupees that were used. And that was kind of forcing everybody that was not banked to become part of the system. The goal of the bankers is not only a CBDC, but to get everybody into the system. So I think it's over 1 billion people. I looked it up once, and memory serves, it was something like 1.5 billion people on the planet are not banked, and they just use cash, in their everyday affairs. But the bankers want everybody to be tracked, traced, and taxed. So they'll force everyone that they can into this system. So there's a few underlying ideas that go along with the CBDC.
If you look at, China and India, these are the nations that are really starting this movement. They're not really part of, the West in that regard. Do you see Western nations also moving in this direction?
Yeah, it's very clear from, what we've talked about in the past. I mean, Mark Carney, when he was, with Canada and the Bank of England, which he no longer is, but he's certainly in the financial realm. And when he spoke to the UN and Jackson, Wyoming, basically said they, meaning central banks globally, want a CBDC that's not backed by anything with the MMT, modern money theory, that they can print digitally until infinity and no one should worry about it.
No, when it comes to India and China, another thing that is in the news regarding those two nations is their accumulation of gold. China officially, halted their gold purchases for about 6 months, waiting for the price to drop. Well, we didn't see that. They started buying again in November. And also India, I believe the November imports for gold hit a record high. Your perspective on the accumulation of gold by these two nations?
This is a little tricky, because it's hard for me to not be biased because I am. I've been looking at, monetary history for most of my life. And, usually when you get in the situation that we are in now, where currency is failing because there's so much printed that people don't trust it, you go back to some type of a gold standard or sound money principles. However, this time it's a global phenomenon because the dollar reserve currency, being a dollar, is failing, but it's failing less against other currencies. So my take is, as objective as it can be, is that gold is the monetary hitching post of the universe. It's the ultimate money. And I think it's used as reserve for everyone, including China and India, as a last resort. I think that if the CBDC doesn't float or get the adoption that's required for the central bankers to be happy that they have put us into a new system, that they have this ace in the hole, meaning gold, that they can use as a carrot to push the system forward. So in other words, a CBDC that's tied to gold some way, shape, or form. That's my take. There's others that think along those same lines. Is that exactly what they're thinking? I don't know. But it is interesting because you got to look at the facts. And facts are the keep accumulating. Well, if they're going to a MMT, modern money theory, where you just print and it's not backed, and that's what they want, they stated so, then why are they buying gold? I think the logical conclusion would be because if it doesn't work, they have something to fall back on. But, there's other thoughts on that.
Interestingly enough, on that, cryptocurrency and gold thread there, we do see HSBC rolling out their tokenized gold. I don't know if you were able to see that story, but your take on, it seems like there might be a merging of cryptocurrency and precious metals in some regard.
Well, as you know, there already is on the private sector. I mean, one I'm associated with LIS, with Load, there's Kinesis, there's Glint, there are others out there. And I think it's kind of a logical progression. I mean, most people that are crypto investors or speculators, I'd say for the most part, are aware about a fiat money system. And yet when you look at what a lot of these cryptos are, is they're just a digital fiat, which the dollar really is. I mean, we still have physical pieces of paper, but that's such a small percentage of transactions, it's almost not worth counting. So now you've got gold behind it with HSBC and others. So you got the mainstream, and you also have the alternative financial system. So I think that's the direction it's going. I mean, I made a very bold prediction, right or wrong. I suggested that the next major leg up in the cryptocurrency will be based upon asset-backed cryptocurrency. So it could be cobalt, could be real estate, could be oil, could be energy, it could be gold, it could be a lot of different things, but where there's something real attached to the token. And I think that's the direction it's going to go. So falling back to what I said a moment ago, that ace in the hole, that gold backing that could take place, maybe they just want to do it in two steps. They've already planned it out that, they're going to throw it out there with no backing, with the plan B being as soon as we get this much resistance, we'll come out with this campaign and everybody will fall in line because it is tied to gold. I don't know, but that's just my thought.
What about other nations? Do you see other nations moving maybe in the West to that? I mean, you mentioned how they're moving towards central bank digital currency, but do you see them moving to gold in any respect?
I do. I think that, there's been proposals out there. I mean, I was lucky to interview Dr. Judy Shelton on, her book on, using the treasury bond market tied to gold to kind of put some credence back into the system, some discipline back into the system. The further you go down these trails of massive inflations where they end in a bad way, usually come back to gold, as I said earlier. And I think that's probably a likely scenario. How that manifests remains to be determined. But as you just said, when you got an HSBC, you got others that are throwing them out there, that idea starts to compound. So I think that, in quieter moments, maybe even, behind closed doors, that even the Fed, there's probably been some whispers about, well, what if? And that what if being, if we go to the new system, how important would gold be? Could it be? What would it do? Could it solve the problem? Would it be better recognized and adopted? And all those kinds of questions. I mean, right now, there's pushback in several states in the United States that at a state level, so we don't want to accept CBDC. And I'm on that side, at least right now. But lots of questions. I mean, when you get to the end of the great inflations, we see what we're seeing. We see competing currencies, gold and silver, of course, the main competitors, but you see all these CBDCs and other proposals. There's barter clubs. There's people that issued their own currency for time units. And the wooden nickel, I mean, that's what sprung out of, a depression earlier in our U.S. history. So lots to think about. It's kind of fascinating in a way, but there isn't really one solid, this is the way it's going to be. We're going to start it, November 1st, 2025. We're not seeing that yet. And I'm not sure that we will. We might see kind of a wishy-washy difference, CBDCs proposed, like I just mentioned with India, and maybe they'll fine-tune it and they'll keep tuning it and they'll get to a point where other nation states will adopt a CBDC and join in on the new system.
Obviously, we're seeing a Trump administration coming soon. Do you see that having any impact on freedom in the monetary system, the transition towards a central bank digital currency? It seems like, at least from my perspective, Trump seems to be more sympathetic to people who are, kind of on the libertarian freedom side of things. Do you see him pushing back at all, or do you see his appointments maybe pushing back or on this central bank digital currency in a more freedom-oriented way?
Unfortunately, I do not. You're asking me my opinion. You look at Elon and Ramaswamy Vivek, and even with Ron Paul in there, which is one-off and it's hard to fit in, but which could be more libertarian-oriented, obviously. But I think they're looking at AI. They're looking at a lot of artificial intelligence doing a lot of the bureaucratic functions that are done by human beings now. Those human beings in the government being displaced by artificial intelligence, where, the welfare department, a lot of these departments that issue checks basically are not eliminated. They're just taken over by artificial intelligence. So I think you're looking at a technocracy, and both Elon and Vivek are very big on technocracy. So that AI leads into the CBDC, but right now you cannot issue a CBDC by the Fed. At least that's the way the law stands. Of course, they're not always abiding by it these days, but let's assume that they would. That means that it'd have to go to Congress, and the Congress would have to vote in, like they voted the Fed in, and say this private banking corporation is allowed to issue a CBDC directly to U.S. citizens. So you could be in a situation where JP Morgan or some other major bank, Wells Fargo, issues their own currency that's a CBDC that is adopted, voluntarily, in quotation marks, to do business, which is within the law right now as it stands. So lots to think about on that realm.
Definitely. I did want to move now to the precious metal markets. We've seen, a little bit of a strength in the gold market, I would say, given the pullback we saw after the election. Prices around $26.50 at the moment. Silver still above $30. Your take on where we are right now?
Yeah, silver's under the 50-day moving average. I think we're still in the consolidation phase. I think we're still going to go sideways in what I call an indecision pattern. And I think indecision pattern is a good name because with Trump coming into office, there's a lot of uncertainty, which there always is. But now with the new administration, how many changes are going to take place immediately that the old administration put into place to kind of cancel some of the Trump ideas in the first time they were in. So I think the market's just going to kind of wander back and forth until there's some clarity to what's going to happen on the fiscal responsibility, what kind of real cuts are going to be in the federal budget, what kind of difference will it really make? Is it mostly talk and no action? Is there going to be a lot of action? So I think the metals are just signaling they don't know which way to go until there's more clarity in the market.
Now, with respect to platinum and palladium, you've been talking a bit about this on your channel, and also how there was a big move into palladium in the last few years, and that could be coming to an end. Can you discuss this?
Sure. So I looked at the platinum palladium market, and I used to trade actually a fair amount of platinum palladium. Almost every January, if you go long, you're going to make money in those metals. But regardless of my past, I did put on a maximum trade, which is called a spread. And the spread was that palladium would go down in price and platinum would go up in price. The beauty about a spread trade is it's less margin and you don't have to be half right and you can make a lot of money. So palladium did go down from roughly almost the 3,000 level down to par with platinum. Platinum basically went sideways. But like I said, but still the spread worked because what I'm saying is that the two will not necessarily converge, but move toward each other. And that happened. Now there's information I put out on my Twitter account, as you mentioned, that palladium use is diminishing and won't be used as much in automobiles or in the auto sector as it was. And that's really because of there's too much supply right now across the board in trucks and cars on a global basis. And so the slowing down isn't because, it's because the economy is contracting. Platinum, on the other hand, is used as well as palladium for catalytic converters. And it's actually looking like a stronger market. So right now I'm more bullish on platinum than palladium. And as an aside, which is interesting, Elijah, as you know, I just got back from the New Orleans Gold Investment Conference. And I never mentioned the word platinum until my speech, but there were like 3 people at the conference from the platform that talked about platinum, which I thought was unusual because you hardly ever hear platinum mentioned. And it seems that some of those people in the hard money group are mentioning platinum as a pretty solid investment. Certainly underperformed what it usually does. It uses as a premium to gold, as most of us know, and it's about half the price. If it caught back up to just par with gold, you would double your platinum position, which you could swap into gold if you so desired. But I would tread lightly on it, even though I like it and I'm involved personally. It's sort of the icing on the cake. I wouldn't take a big platinum position. I think gold and silver are more destined for greatness than platinum, but platinum would be something to consider.
You mentioned how it's half of gold's price. I mean, at the moment, under 1,000, I believe it's almost, a third of gold's price. Yeah. It's interesting how, as we've seen this year, this significant rise in both gold and silver, platinum has really just gone sideways, which is a little bit surprising because often we will see them move in tandem a little bit. Are you surprised at all by the movement in gold and silver, but not in platinum this year?
Absolutely. I mean, first of all, it's so rare. It's 15 times rarer than gold. Secondly, 70% comes out of South Africa, and they're having problems mining. They're having problems with electricity. They're having political issues. And with all those tensions, I thought that you'd get at least back to what most of the platinum miners mine now, which is about 1,200 US. And we're still sitting, under that price. So I think if you have patience, I think it's about the least risky metal at this point in time. I think there's more downside potentially in gold and silver than there is platinum right now. I mean, if you start buying platinum under $1,000 US, you're one of the best platinum miners in the world because you're actually owning the metal without having to mine it. It's already in a investment grade form, and you didn't have all the effort and the worry and the concerns that it takes to run a mining operation. So I do like it, but I am surprised. I really thought at the beginning of the year when, a year ago or more, but basically it's been a year since I've kind of been pounding the table on platinum. You asked me last year, and maybe you did, where was platinum going to be? I would say higher. And I think it's off 7% for the year so far. I forget the exact number. I have to look it up. But I'll probably report that on one of my last two reports here on my weekly perspective. I'll go over all the metals, what they did for the year. I do know that the XAU and the HUI, both the major indexes for the mining shares, have not performed as well as gold itself. And that's disheartening for people that invest in mining equities. I mean, basically you get a leverage factor when you buy and we have at the Morgan Report done better than the averages, which I usually do, but still it's again disheartening when you see what gold prices have done and what the margins are for some of these better producers and what value these stocks actually represent, but no one seems to be paying attention.
All right. Well, before we let you go, David, maybe if you could just give a year-end overview of the gold, silver, platinum and palladium markets, what you're looking for as we head into the end of the year. I know also we're seeing the Fed meeting this week. They're very much expected to do a 25% rate decrease. Your perspective on that and how we might see the metals move into the end of the year?
Yeah, I think patience is required. I mean, we're going to see the sideways move I said earlier into the end of the year. I think you see more weakness perhaps in the shares due to tax loss selling and squaring the books on not only individual accounts, but money managers as well. And I'm thinking that you may see kind of a lackluster first quarter of 2025. You usually get a pretty good bounce in the metals, at least by March. A lot of times you'll get a big bounce in the equities because they sell off too hard. People wait their 30 days, 31 days and rebuy them, and you get kind of a lift in the equities. You might see that. But overall, I don't think you're going to see a lot of emphasis into the metals, either in the equity side or the metals themselves, due to what I said earlier. With the new administration coming in on the 21st of January and just the market being kind of in a paused wait and see attitude. So that's what I expect next year. If I'm wrong, obviously we'll be talking about it on the next interview. And of course, for my paid premium members, I'll immediately make a video and explain why and what we should do about it. But I think it's a pretty safe bet to just build cash, relax, wait for the new administration to come in, take a deep breath, and let's see, probably after the first quarter what the markets look like.
Fantastic. It's themorganreport.com, also silverguru22 on X. Can you tell us a bit about this?
Yeah, I post most of the up-to-date news like I did on the Central Bank of India going to a CBDC pilot program. And I stay up on the financial news as much as possible. Most of those posts are for me. There's only one other person has access to my account. And it's just a good way to stay in touch with my thoughts. Well, it's not a lot, but there's a fair amount of stuff I post that I don't agree with it. But I post it anyway because I want it for the record. Someone says, something about a CBDC that I totally disagree with. I'll put it up there anyway because I want it on my X account so I could go back later and then maybe comment on it that, this was guaranteed going to happen. And guess what? It never did get off the ground or whatever. So just because I post something doesn't necessarily mean I'm in line with it. It just means I want it out there for thinking. My main purpose, I think, is to teach critical thinking in all areas of life, especially in the financial sector, whereas you so aptly did, liberty and finance. Without really a true free market system, we really don't have a lot of liberty. And that's, of course, what I've dedicated most of my work toward.
Fantastic. David, once again, thank you so much for your time, and God bless and Merry Christmas.
Merry Christmas to you. Thank you, Elijah.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. And finally, 1/10-ounce gold Britannia are just $29.99 over melt per coin. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.